Okay, class. Good evening, everyone. So let's quickly go through these two questions on statement of cash flows for last diet. Let's see if we can solve each of them for 30 minutes per question, provided you're giving me figures as at when I need it, and it need to be very fast. So two questions. So let's diet. The first question was on consolidated statement of cash flows, though it was not a compulsory question. And since this is financial reporting, a lot of you will argue that we're not taught this, but they asked it anyway, which shows that they can ask it again because they believe that you should be able to, since we teach you group account, there's group account in your syllabus, so you should be able to solve statement of cash flows for a simple group. And this is a simple group statement of cash flow. So I'll quickly show you how to do it. Before I do that, the next question, which is question 4 of last diet, was also statement of cash flows. So last diet, 2 questions on statement of cash flows. It's not a topic you want to joke with. You really have to get a good hold of it. And it's always very easy if you understand the technique. Good enough. This question 4, if you look at the requirement of this question 4, is asking you to prepare a statement of cash flows for Ogbagi using direct method. I mean, a lot of students might miss out on this detail and just sharp prepare statement of cash flows, choose the method they believe they want to use. But this question is highly specific. It says that you should use direct method. And the second one also was very specific, which is the question 3. And this one requires that you should use indirect method. Okay, let me solve this one first, the question 4. Then before I go back to the one dealing with group cash flow. Okay, so looking at this question 4, they gave us statement of profit or loss. They also give you statement of financial position. The examiner was magnanimous to give you the increase or decrease, because really you would need to use all these increase or decrease when solving statement of cash flows. And yeah, and they gave us some additional information. And this additional information, highly important. It's like additional information on statement of cash flows are always like free marks for you. Free marks. Because the additional information will tell you cash items. Just slot them in. Free marks. If you look at this additional information here, they told us that plants which had a carrying amount of 40 million was sold for 56 million. 56 million is a cash inflow under investing. They sold. And they said a new equipment was purchased for 200 million. That's a cash outflow. Acquisition of assets under investing. If you look at additional information too, they said intangibles valued at 60 million were acquired for cash. Cash outflow. Under investing. Note 3, they said we have borrowings of 40 million were made during the year and received in cash. Cash inflow, financing. Dividend paid in cash amounted to 200 million. Cash outflow, financing. Free marks, and that's how it is. So let's look at it methodically. Good enough. Now, using direct method. I prefer direct method because it's methodical. You take it step by step. And one thing you need to know about statement of cash flows is that considering that you are preparing it from P&L and also your statement of financial position, before you can say you have prepared a statement of cash flows, all items must be touched. All items in P&L must be shaped. must be touched. You need to extract cash element on each of them, and very straightforward, because it's the same way, the same methodology in extracting cash item from one item. It's the same methodology you use in extracting cash item from another. The same way, especially direct method is so straightforward. So I will show you. This question we're looking at is last diet. So in case you also want to open it up, because I will be going back and forth for me to check it. Okay, so we're looking at Gbagi or Gbagi PLC. We are required to prepare statement of cash flows. You could wish to put direct method. You don't have to put it really. For the year ended, don't go and put hazard. That will be wrong. For the year ended December 31st, 2022, this title gives you mark in the exam. This title gives you mark in the exam. It gives half mark. So we don't joke with it. Then I go to my level of rounding and I get that from the question. If you look at this statement of financial position after the years, below it, the naira in thousands. Okay, that's how I get my level of rounding. And that's exactly how you have to present your solution as well. So let me have it there. I won't decide to use just one. Okay, so the first section of your statement of cash flows always is your operating activities. Okay, operating activities. And operating activities are looking at cash items from your P&L items. In fact, operating activities, if you look at your total comprehensive income from here, okay, what operating activities looks at, or what it wants to get, is that out of this 301,600, I don't know if you can all see it, this 301,600, this total comprehensive income here, how much of it is cash? How much of it is cash? That is what operating activities looks at. So all items in your P&L, you need to pick them one by one. Okay, how much is cash? How much is cash? And there are methodologies for doing that. Quite straightforward. Okay, so I think that it's important we sort those one first through workings. So I might want to start with my workings. Then I move towards putting them in the solution. Okay, so let's pick them one by one. Direct method, you have to pick each item in your P&L one by one. Logically, you don't have to jump any step. So the first item here is revenue. And as you can see, my revenue is 3.2 million in my P&L. Knowing fully well that this P&L will have been prepared on a cash basis, so there is possibility that there is a portion of this revenue that is non-cash. There is a portion there that is not cash. What we need is that out of this 3.2 million, how much of it is cash? How much did we receive in cash? And how do you know that? The only way to know that is to check if there is anybody that is owing us. And the only way to know that is through our receivables. Do we have receivables? Yes. If you look at statement of financial position, we have account receivables. We have account receivables. And the examiner was magnanimous to tell you that this year, if you look at your account receivables, in 2021, it was 280. It increased to 316. That means the examiner gave you the increase, 36,000. You see, what that increase means is that, in fact, the increase is as a result of this year alone. The increase, of course, is this year because last year it was 280. It increased by 36,000 this year. If not that, some of you might not get that straight. The easiest way for you to do it is that, okay, that means this year, 36,000 have not paid. 36,000 are owing me this year. I just need to remove it from this 3.2 million. If I made a sale of 3.2 and 36,000 are owing, the balance are those that have paid, are the money that I've collected already. That's the fastest way to do it. I don't know if that is clear, if you can use that approach. Alternatively is the longer approach. Okay, so what we want, the longer approach is cash received from customers. The general approach is you will do opening receivables, and our opening receivables is 280,000. I'm sure you can all see that. 280,000. You would consider, okay, what's our sales for the year? We got that as 3.2 million. Then you deduct your closing receivables. How much was our closing receivables? 316,000. Okay. How much should that give us? This is the cash received from customers. Is either you do this or you just use that simple approach. This 36,000, just take out this 36,000 from 3.2 million, gives you the same thing. Gives you the same thing. But the beauty of this is that this is how you extract cash element from every other item. Is this methodology. So if you just get used to this one, Stephanie, you're done. Is that clear, everybody?
Yes, sir.
Yes, sir.
Yes, sir.
Okay,
Yes, sir.
good. So if I may ask you, this is not the time for you, no time to really learn so much anymore. You need to grab us immediately what you can grab and move on. Which method would you have preferred? Is it this one or that increase, you just remove it?
You want to just remove it.
You want to just remove it, right? Okay. So that is the method I would use if I was solving this myself. I don't know if you can get that. I would highly recommend that. But for those that you think you make mistakes, because in cases where decrease, cases where there are decrease, that means you will do the reverse. Like this 36,000, it was an increase. If it were to be a decrease, I won't be removing that decrease from 3.2. I'll be adding it. So if you can get that dynamics, then that is fine and fantastic. But if you make mistake, please just do this and get your marks. This 20 marks question, you have a whole of 36 minutes to solve it, which is more than enough to solve this question. So I will go to my statement of cash flows. I'll have cash received from customers is an inflow, 3164. So I've extracted cash element from revenue. I move on to the next one, interest income. My interest income was 20,000. I need a cash element from this interest income. I'll go and check. Is anybody owing me interest? How will I know? I go to my current assets because that is where I can find receivable. And as you can see, gloriously, after prepayment, there is an interest receivable here. There is an interest receivable. I hope you can all see it. In 2021, it was
Yes,
600.
sir.
In 2020, good, it was 400. See that in this case now, this was a decrease. If I don't want to go through that long route, this 200, that was a decrease. I will have actually added it to this
We'll add it back.
20,000. I will just add it back, correct? That's the fastest way. If you can master that, it's better. But for every other person that you cannot master that, please, this will not take time at all. And it's the same thing, cash received from interest income. So I will get my opening interest receivable. How much is my opening interest receivable? 600. My interest income for the year, how much is it? 20.
20.
My closing interest receivable, how much is that? 400.
400.
Yeah. Then the cash received for the year, how much do we have? 20,200. It will take you a few seconds to do this. Like I said, it's the same thing, the same process. This gives you your cash received from interest income. It's the same thing as this one. So, cash received from interest income. How much? 20,200. I'm done with that. I go to the next item. What's the next item? Gain on sale of plants. My dear students, gain on sale of plants is a non-cash item. Is a non-cash item. You ignore it. Because, in fact, the cash element here will have been the money they received when they sold it. The money they received when they sold it, which of course they will have given you the additional information, which they did. Which was the additional information one, that they sold it for 56 million. That's the cash element. You see this gain, you ignore. You always find it in most corrections in cash flow. You ignore them. They are non-cash item. If I was using indirect method, I would have added this one back because it's non-cash. But for direct, I love direct. It's so straightforward. For direct, this gain, I ignore it. So I move to the next item. Since I'm ignoring cost gain on sales of plants, I go to cost of sales, which is the next item. Now, my cost of sales, you know that cost of sales is opening inventory plus purchases minus closing inventory. First, opening inventory and closing inventory are non-cash item. I need to remove those ones first so I can get my purchases. That's my first task. So let me quickly do that. For my cost of sales, working straight, determination of purchases. What's my opening inventory? From my additional information, okay, inventories, opening 260, closing 280, okay? Opening 260, I had purchases, which I don't know. Then my closing inventory, said is 280. What's my cost of sales? Go back. My cost of sales is 1920. 1920. Okay, so you need to be able to do this when it comes to of cash flows, how to get this one as balancing figure. The easiest way for you is, because this is like an equation now, just do this 260. This in jacket means minus So 260 minus 280, that gives me minus 20. Okay, that means that minus 20 is on one side. My answer is 1920. So that minus 20, that means I need to take it to the other side of the equation. It becomes positive, right? Then it becomes 1920 plus 20. That means this one becomes 1940. So it's like the balancing figure here. If you have other ways to compute it that is easier for you, please do it. What is important is you get this 1940 and you don't get it wrong. The easiest way for me, I will just say 260, whatever it is, this, I will just say this minus this. Whatever it gives me, I take it to the other side of the equation. In this case, 260 minus 280 is giving me minus 20. I take it to the other side of the equation, it becomes positive. Then that's 20. Minus 20 becomes 20. And I add it to the 1920. Then I get my answer. Okay, just to be sure that you understand what I'm saying. Okay, what if this was 230? What if this was 230? What would be my purchases? Anybody?
30. No. To be 1,950,000.
That's wrong.
It's going to be 1,890,000.
Yes.
That's correct.
2
That's correct.
minus
So I just
30.
intentionally gave you the one that, because when you do 260 minus 230, it becomes 30. It becomes positive 30.
1,950,000. 1,950,000.
No, Aisha.
Oh, when you multiply
Is 1,890,000. Because when you do 260 minus 30, it becomes positive 30. When it goes to the other side of the equation to
30.
go and meet this answer, it becomes negative. So 1920 minus 30 is 1890. But in this case now, that's not the
Okay,
case.
becomes negative. Yes, become
Exactly.
negative. Mm.
Exactly. So this is 280 now. In this case now, 260
Mm.
minus 280 is minus 20. If it goes to the other side of the equation, it becomes positive. When you add it to 1920, is 1940. Now, having gotten that, then I can then
Mm.
get my cash paid to suppliers. So my purchases is 1940. How much of it have I paid? How much of it have I paid? Or did I pay everything? How do I know? I will check. Am I owing anybody? And if I'm owing anybody, when it comes to purchases, the people I'm owing will be represented by trade payables. If you are owing people from buying goods from them, in your balance sheet, in your statement of financial position, you will see those ones as trade payables. It will be there. That means you are owing. So let's check it. In my statement of financial position, do I have trade payables? Yes, I do. There's an account payables here below. And the simple way is I have 12 here. That means, and it is an increase because in previous year it was 168. It increased by 12 to 180. That means this year I'm owing only 12. The fastest way is just to remove that 12 from that 1940. Because I'm only owing 12 from 1940. That means I've paid the remaining. That's the fastest way. You can do that in the exam. But in this case, 168 opening, 180 closing, still very fast. So my opening trade payables, we said that is how much? 168. My purchases, we said that is 1940. My closing trade payables, how much did you call that? 180 or what? Yeah, 180. So what's my cash pay to suppliers? That should be 1928. Is that correct?
What happened 1828?
Sorry?
1928.
1928. Yes. Should be 1928. So I go to my statement of cash flows. Cash paid to suppliers. It will be an outflow. 1928 is an outflow. 1928. I'm done with my cost of sales. I move to my staff remunerations. 480. Have I paid everything? I will check if I'm owing any of them. I'm owing. After my account payables, I have staff remuneration payables. Okay, 16,000 in year one, 20,000 in year two, and for the year it was 480,000. Okay, the same method. So that's note 5. That's cash paid to staff. Opening staff remuneration. How much was it?
16,000.
16,000. Staff cost for the year. How much was this?
20,000.
Closing staff remuneration. How much is this? What's the balance?
40. I forgot to know. It's
476,000. Can you confirm?
yeah. That's it.
So I go to this one, cash paid to staffs. It will be an outflow for 76,000. I go to the next one.
Yes.
That's depreciation on plant and equipment. This one you ignore. This one you ignore. Depreciation is non-cash. I go to the next one, interest expense, 16,000. Have I paid everything? I go to my balance sheet and see if I'm owing. I go there again. Is there any interest payable? Oh, there is. Accrued interest. This is similar to what I asked you this afternoon. This accrued interest. Okay, somebody wants to ask a question. Tiana, please go ahead.
Thank you, sir. Sir,
Yeah.
I'm sorry. The way you are picking this thing is confusing, and I want you to. Is it that because earlier you picked from the statement of financial position, the accounts payable and the staff remuneration. Now you are going up again. Like, where are we to focus on in picking? Like, I don't know. I just going come here. I don't understand. Do you get my
Okay.
question? You go to.
Of course, I get it.
Okay, thank you, sir.
Yeah, I did. Okay. So I have to go back again. So sorry for those that are getting it. I mean, exam is very close. Everybody has to get it. So picking it is very logical. Okay. Let me start from revenue. Revenue is 3.2. What I need in this revenue is how much have I actually received? And the only way you can get it is for you to ask, am I owing anybody? How do you know that you are owing anybody? You will know that from your statement of financial position to your account receivable. That was why I went to account receivable to use that opening 3.2, then closing. China, is that clear?
Yes, sir. But are you saying is our profit or loss we are actually working on board? Our statement of financial position will be like our additional information to work with.
If that's how you understand it, that's fine.
Okay.
That's yeah. So I mean, operating activities. Operating activities is you pick statement of financial position one by one. You see that I'm moving systematically. It's not scattered, it's logical, one after the other. From revenue, I move to interest income. I move to gains or sales of plant. I said that one is non-cash. I move to cost of sales. I move to tax. I'm moving logically. And I'm doing the same thing. If you see all my workings, it's the same. And it's the same workings. For the customers, I went to receivables. I use that. For my interest income, I went to interest receivable. I use that. For my purchases, I got my purchases first. For my cost of sales, using this. Then from that purchases, I use trade payables because that's the one that I will use to know who I'm owing. For staff, that one is clear. It was very specific there that there were some staff remuneration that I'm owing. Is there in the balance sheet. Then and that's everything the same way. Okay, so Tiana, is that clear, please? If it's not clear, let us know so that we
It's clear,
clarify.
sir.
Okay,
Thank you, sir.
yeah. So we were going to interest expense. Yeah, interest expense. So for interest expense also, the same thing. And I say that I can see an accrued interest here after the staff remuneration payable, which shows that I am owing interest. So opening is 0, our closing is 800. Then for the year is 16,000. Let's use the same methodology for consistency so that you know that if you are using this, you know you will never get it wrong. Cash paid on interest, or you can say your interest paid. My opening interest payable, say this is 0. Interest for the year, say this is 16,000. My closing interest payable, how much is that? 800. What do you have as balance? 15,200.
200.
Yeah, cool. Interest paid. You need to understand that interest paid is an outflow. It's important you're able to put it in jacket, otherwise that will also cause problems. The same way again, I go to the next item here is other expenses. If you jump one item, it becomes a problem. Other expenses, 304,000. Okay. I paid other expense of 300,000. Did I pay everything? I go and look for it. Graciously, I can see other expenses payable. Other expenses payable. Opening 12, closing 7.2. Okay. Let me ask you a question. What if these other expenses, what if I did not find other expenses payable? Tiana, because you're the one that asked me that question the other time. Sorry, I'm going to ask you this. What if I could not find other expense payable at all? So how much will go to my cash flow as interest paid? Sorry, as other expense paid. Tiana,
Do 304.
sorry?
Sir, do 304.
Your mic.
That's correct. Okay, good. That means
Who is
you
doing
actually,
birthday?
maybe after the class, we'll get, she will share gifts to us. Now, fine. Yeah. Okay. So good. You get the gist now. That's good. So cash paid on other expense. So opening other expense payable. I think it was 16,000 or what? I can't remember. Yeah, 12,000. Then
12,000.
close this. Yeah, 12K. Then other expense for the year
304.
was 304. Then what's my closing other expense payable?
7,200.
72.
Here. So how much was the cash paid?
300,000, 800.
800.
308, 800.
Okay. My cash other interest expense paid 308, 800. Okay, good. So after my other expense paid, what's the next item here?
Profit before tax.
Okay, so that one is an answer, so I won't touch that. Then my income tax.
That
Okay,
one is
so
what, sir?
that's just the answer,
That was
so I
the
won't
answer
touch that.
before.
So this answer, I won't touch it. So I go to my income tax expense. So this one I have to be very careful. I have to be very careful. Why am I being careful? Because in my other comprehensive income, there is a gain on sale of investments. I know that gain on sale is a non-cash, so I'm going to ignore. Just the same way I ignore this gain on sale of plant, I'm ignoring it. So, however, there was an attributable tax also, which is 24. So that means in P&L, my tax is not just this 120. It's actually 120 plus 24. That's one thing you have to be very careful of. Number two is how much did you actually pay in tax? The same approach that I've been using. I will just go to my statement of financial position. Am I owing any tax? Of course you are. And if you look at it, the last item here is current tax payable. So you are owing. However, there is also deferred tax here. So your current tax and your deferred tax will represent what you will use as your movement. Because if you remember when I taught you in class, this income tax is an aggregation of current and deferred tax. So I will do the same thing I've been doing, just that now we'll have multiple items. I will pick a lot of opening and a lot of closing. So we are looking at tax paid. So first is my opening current tax. How should I do it? My opening. How should I make it easier for you? Okay, let's do this. My opening was opening for the current. This 56,000. For the deferred is 20,000. So 56,000 plus 20,000. That gives me how much? 76,000. So income tax expense, that's that 120,000 plus the 24 expense. And let me show you how I got that. You should know that from P&L, the 120, the income tax 120, and the tax on this gain on sale of investments in other income 24. So 120 plus 24 will give
1224.
me 122,400. Am I correct?
Yes.
Okay. 122,400. Then the closing. I go to my current tax. The closing is 64. My deferred tax, the closing is 34,400. So 64 plus 34,400. How much is that? That's 94,400. Am I correct?
98,400.
Okay, 98,400. Thank you. Okay, so how much do we have as tax paid?
$100,000.
100,000. So my tax paid. 100,000. I go back to my P&L. I have picked every item here. Every item. The only two items I did not pick, or three, are those that are non-cash. Gain on sale of investments and plants and depreciation. Every other item I picked. Every other item I picked. And it's logical. So I'm done with operating activities. So can you sum this up for me? Running behind.
330.
Sorry?
330,000.
Ah, that voice. Let's confirm that figure.
Sorry.
So, Sue, did you work
Yeah.
on repayment, prepayment? Or we
I'm
are not
supposed to.
using it here?
Where is there anywhere that I can use it here?
Okay. We are with sir.
No, you can suggest where we can use it.
Ah, can you
The
say
total is 356,000.
The what?
The total is 356,000.
I got
Are you that?
356,200 though.
200,
356,
yes.
200.
200,
That is
yes.
what I got too. That is what
Okay,
I got
200.
too.
Sorry.
Exactly.
356,
Yeah, thank
200.
you. Yeah. Is it outflow or inflow? You did not
Net
notice.
cash inflow.
Inflow.
Yeah, inflow. Okay. So, hey, when I heard that voice, you know that it's not a familiar voice. So, I mean, if not, this thing will not just balance. We'll not be looking for it up and down. Okay, let's go to investing activities. The person that asked me about prepayment, I'm sure that person is opening the solution of the ICAN pack side by side. That's not advisable. You're not doing yourself.
sir, I'm not. Don't be sure of the unknown, sir. Why I asked was we've actually studied this question in class, and that prepayment actually caused issue that Mr. Ibrahim Shah puts. Well, so I just want to hear your own opinion regarding it. Actually, what we saw at first in class, he didn't add it, but later on, it was like there's a mistake somewhere so we came to add it. In fact, I even squeezed it to a place in my notes to adjust. So I just want to hear, and I asked Eric it that I need clarification on this. And now that you are treating the same question again, that's what I'm asking. So I'm not checking ICAN solution, sir.
Okay, this channel sounds like Adiago.
I'm the one.
Okay. Okay. Yeah, Cynthia, go ahead, please.
So the thing actually caused something in class, and I was like, people were like,
Adiago, I've heard you.
explain, sir.
Okay. Yeah, Cynthia, you raised up your hand, or is it a mistake? Okay, I think it's a mistake. Okay. So, yeah. So ordinarily, okay, I'm trying to solve this in the easiest way possible for you, right? you see, ordinarily, this prepayments, okay, where I will go and put it is investing. You will see, I'll be working on it line by line. In the exam, except if you have done it before, except if somebody tells you, there's no way you possibly know that this should come in as part of your operating, because ordinarily, these other expenses here, okay, these other expenses here, we should have factored in prepayment as part of it. But that's too much of an assumption for an exam. When there's a simpler way that will give you equal mark, you will get an equal, because even in practice, in real life, this is what I do in real life. I put most of any other items that I can't get directly, or that I cannot link directly to my P&L. I put them as when I'm looking at the movements in assets, I'll just put them under investing. I'll just put them under investing. So, which is also okay for you. And there's no law that says that investing must be only items of non-current asset. Because believe me, you in the exam, you will not know. So think outside of the exam, like you are in the exam, right? Because they won't set this same question. Maybe they might, I don't know, but you might not find something like that. Do it logically, and I'm sure you're going to be fine, which is what we're trying to do. Okay, so let's go to investing. I'm done with every item in my P&L. I'm done with every item in my P&L. For my investing, basically, I would move from down, because I can see they started from cash here. And if I'm moving from up, my cash item is, I don't touch it. I don't need to move to it at all, because that's what I'm working towards. My account receivables, I have touched it already. I've dealt with it. So I leave it out. My inventories, I've touched it already. I've dealt with it. I leave it out. My prepayments, I haven't touched it. So I need to consider the movement. And you will see here, there is an increase in prepayments from 32,000 to 38,000. So I can easily put it in my investing, or in a simpler way, if you wish, does the same way you do your indirect, but this is not indirect method, this is direct method. So, I mean, you can put your increase in prepayment, because prepayment can be probably maybe you paid rent, or you paid rent for 4 years. That's an investment. You paid rent for 5 years. That's a major investment. So what goes to P&L is the rent for the year. The remaining that are not for the year, that's what we call prepayment. So who says that cannot go to investing? So there's an increase in prepayment by how much again? 6,000. 6,000. So there's a 6,000 outflow here. There's a 6,000 outflow here. Also, still under after my prepayment, my interest receivable, I've dealt with it already. I've touched it, so I don't need to move to it again. My plant and equipment, oh, the examiner was so magnanimous. He has saved me a whole lot here. He has given me acquisition and disposal. If you had given me only acquisition, there's a movement you would have been forced to do. Opening for the year, acquisition, disposal, just for you to get a balance. But here, they have made your life easy, because in this additional information one, they told us that plants which are the carrying amount of 40 million, okay, was sold for 56 million cash, and another plant was bought for 200 million. So under my investing, I will have sales proceeds from sales of what? Of plants.
For plants, okay.
And that's 56 million. And also I have acquisition of plants. And that's 200 million.
About 200 million.
And that's everything. From here, here, no, that's not everything. There is also an investment here. Hey, Palumi, go ahead, please.
Okay, so sorry to throw you back a bit. I just wanted to confirm something because just like Christiana said, we had treated this in class before. And I want to just confirm. Can we post this thing anywhere? It's not that the answer should be balanced. Because I remember when we did this thing in class, and then I mentioned that, okay, we had interest expense in operating activities, but we didn't have interest income. And I remember I raised that question. And then the lecturer told us that you can only have interest income when you invest, that you get interest from your investment activities. So your interest income should actually go to investment activities. But I see that here we are putting it under operating activities. So I just want to ask, can these things be interchanged as long as you just arrive at the cash and cash equivalents for the year?
Well, it cannot be interchanged. It cannot be interchanged. So you have to put it at the right place at the right time. So the only reason why I considered it here is because I'm not sure that this company is just a normal company or a bank. Because ordinarily, the way they arranged this P&L, finance income should have been, it should come after your interest expense. They should be together as after your PBT, or yeah, it should come after your operating profit. Then you have your finance cost, you add your finance income, then you get it like that. So this company decided to put it as a top line item. So it could be probably maybe that's part of their key line of operation or major line of activities as an organization. So maybe they do regular investments, they sell investments, they buy investments, they do all of that. And which is also confirmed from this gain on sale of investments that we have. So it looks more like the operational activity in this scenario. Ordinarily, if this finance income had been under my after operating profits, then I have finance income, then it shows that it's a one-off item for them and not something that they're doing as part of their major source of revenue as an organization. So yeah, interest income often should go to investment activities as part of your interest income. But in this case, I can easily put it as part of my operations. And particularly, since I'm using direct method, right? And you can be logical and pick it one by one like that. Pick it one by one. And so if you put it as part of your operating activities, the examiner will not mark you bad. The examiner will not mark you bad because according to IAS 7, okay, it's left to the policy of the organization when it comes to issues like that. IAS 7 governs, and IAS 7 didn't say that your finance income must be in your investing activity. So even beyond this observation that I've mentioned from the way this P&L was arranged, even without that, if I have naturally put in my finance income in my operating, they won't mark you bad. You are still going to get a tick. You are still going to get a tick. But it goes easily for you if you can put it under your investing. But in this case, in this particular question, we might have to go ahead that way by leaving it there.
Okay, thank you so much.
That was a very long explanation. Okay.
Next one is here.
So do we have any other item that goes to investing apart from these three? That is all. Because looking at it, except intangible assets. Okay, so intangible asset in 2021 is 0, in 2022 is 60,000. So I have acquisition of what?
Intangible asset.
And is how much? 60,000. And I think they gave me in the notes here that note 2, the intangible valued at 60 million were acquired for cash. Okay, good. Now, my challenge is this investments of 8,000. And this 8,000 investment, ordinarily, it should be under investing activity as an outflow. But if you do that, you'll be wrong because they have sold that this 8,000
Depends
that
on
you're
the
seeing
investment.
here is not cash from investment. It's the gain that they made on that investment. It's like they debited that investment and they credited this gain. So it is in this 8,000 you're seeing here is a non-cash item. It's a non-cash item. Okay. I don't know how you're going to figure that out in the exam,
Ah,
but
Jesus.
Sorry. Is it like a revaluation surplus kind of thing?
yes, something like that. But and again, I don't know if you remember financial instrument where I taught you, when you
Fair
have fair
value.
value through OCI. Yes, this is something like that. This is something like that. And this investment, it looks as if it was shares that they bought. That is 8,000. So what I'm saying is this, that I don't know if you would be able to link it, this 8,000 with this 8,000. But even if you don't, it does not really matter. Even if you put the 8,000 in cash flow, it does not matter because in the exam, it's tick, 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 tick. They just give you tick, tick, tick. So, I mean, okay. So that's that investment. Okay, muted the person. Okay, so what's the net cash flows from investing activities? How much?
Negative 210,000.
Outflow. Finally, is my financing activities. Now, for my financing activities, you see for my investing activities, what I was looking at was the assets parts of my statement of cash flows. And I ensured I picked everything. The one I could not pick, I linked it, which is this investment. I was able to link it to explain that it is non-cash. Every other one I picked. For my financing, is your liability section that will be your financing. Your liability. Look at them one by one. So the first one is this account payable is settled already. Staff remuneration payable, we have already used it. Accrued interest, used. Other expense payable, used. Current tax payable, used. Deferred tax liability, used. Long-term borrowings, haven't used. So there is an increase in borrowings of 40,000. Okay? So increase in borrowing of 40,000. Will this be an inflow or an outflow?
Inflow.
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 Yeah, that's correct. Then the next one is my share capital. My share capital did not change. 800. So I will leave that. My retained earnings. My retained earnings. Now, ordinarily, you see, I would have moved these retained earnings. And the way I will move it is I will do opening retained earnings plus my profit minus closing. the balance will give me dividend paid. But the examiner was very nice to you guys, very nice. He already told me in the final notes that my dividend paid is 200 million. It's 200 million. Even if you do what I've mentioned, you will still get the same thing. If you do 148,600 plus what's the dividend, the profit for the year, plus 296,000 profit for the year, minus 244,600. Can somebody, let's check it, please, just to be sure, in case we're not given the exam. 148,600 plus 296,000 minus 244,600
It's correct.
gives you that 200,000.
200. Yes.
So you have to always do that in the exam. But in this case, you don't have to go through that workings because they already gave us 200,000. That's an outflow of how much? 240. So we'll have net cash inflows from where?
So
That will be
is it 200
outflow.
or
That will be
240?
240.
Okay, outflow
What?
200.
Sorry. Okay, I have 200.
Yeah.
160.
So that's 160 outflow. This one should be outflow too. So what's my net cash and cash equivalents for the year?
Please draw up, sir, to know the financing, the operating amount, sir.
Okay, I'm coming. We call this part reconciliation of cash and cash equivalent. So what's 160 plus 210 minus 356,200?
13,800 in negative.
13,800 negative. What's my opening cash and cash equivalent? What's my opening cash and cash equivalent? That's my 240,000. Have you seen it?
240,000, yes.
240. If you sum these two together and you're getting that closing cash and cash equivalents,
Yes.
you've gotten everything. How much did you get?
226,200.
Okay,
All
so
right.
if you don't get it in the exam, please, it doesn't really matter. It doesn't mean anything at all. At all. Just go on. See, the beauty of statement of cash flows, and I will really recommend that you do it in the exam because it's very easy. Any form, anyhow they have asked it so far, it has always been easy. It's something you should do. It's something you can do within 30 minutes. And it's so easy to pick points because it's, especially when they say direct, even indirect, tick by tick, just keep moving. And the funny thing is for this direct, it's the same methodology, the same workings, the same everything from A to Z, the same workings. It's just for you to be able to link like what Hannah asked the other time, for you to know, okay, which item of financial position are you dealing with? And that is also very straightforward to link because they would tell you directly. The one they did not tell me, which is that prepayment, I just went to put it in investing. I didn't assume. I went to put it in investing. Yeah,
That's very nice.
30 minutes has become 1 hour. Unfortunately, we can't solve the second one. and I was thinking we'll be able to do
But I will do
this.
the second one tomorrow.
Or should we attempt the second one? Then you explain to us.
No. So,
Ah,
so,
I'm
so
Can we
sorry,
fix
just
another
asking.
time for the second one?
is the second one indirect method?
Yes, the second one is indirect method.
Can we do it tomorrow by 8 o'clock when we're doing the other class?
Let's continue like this. Everybody is still opened. Sir, let's fire on,
I
please.
open. Tell me, I came back from work very late, please.
You came back. Where may I come back from work very early? Allow you make to continue class. Now online we do.
Maybe
This particular question, does this really have cash and cash equivalents?
People respect ourselves. Now online we do. Continue.
Do you know if your lecturer has something he wants to grant you? Or if his wife is there, he wants him to continue talking to you with his wife, Abby?
Please, this particular question, does it really carry cash and
This
cash
one
equivalents?
is his wife. He
Yes,
wants us to be.
yes, it does. It does. This one also has it.
Mr. Ashisha, I have a question. So every of this cash flow would always have the cash and cash equivalents. So to let us know when we are balanced, right?
Yes, sir. Yes, sir. In fact, there are some that you have more than one cash and cash equivalents where they will give you cash at bank. They will now give you they will call it short-term investments.
Wow.
When we call it short-term investments, is a balancing item, is a cash equivalent. Is a cash equivalent. In fact, when you see bank overdraft also, shall you with me? When you see bank overdraft also, it's also be a cash equivalent. Bank overdraft is a cash equivalent also. So you might see
Can we
a
find a
question like
question
that.
that has that?
Okay,
Mr.
I think
Wasil,
we will look for one. Yes.
please, I want to get this part because when I asked earlier, this profit before tax, it was you and one person that replied that we are not using it. That is an answer that we are looking for. I didn't get that part.
Oh, okay. Yeah. So this PPT of 416 is
Yes,
just
sir.
the result of all other line items, just the same way I did use this 3236. So this is just the result of all these items. So I can't pick it as this. It's not a separate item. It's not an item in itself. It's just profit.
Okay. But assuming it's indirect, that's what I'll start with.
Yes, that's what we start with. So I think we should just solve the second one also now for another 30 minutes. I think we should just hang on for 30 minutes. Yeah, John is
Thank you,
next.
sir.
Okay, I open your
Yeah.
eye. Let's start.
Yeah, Joseph, please go ahead, please. Joseph. Okay, I think it's a mistake.
Which question are we solving now?
The one on group cash flow.
Sir?
The one on group cash flow. The second question
It's
of
still
last
the
night.
same thing. It's still November 2024.
Yes,
I
it's
think
still
question
November
3.
2024.
Question what?
Question 3.
Mr. Wasi, please, are you sharing the solution?
Definitely. As soon as
All
I'm
right.
done with this
Is
class, I
it
will send you the
papaya?
link.
All right. Thank you.
Yes, Papaya.
Yes, it is papaya.
But Lumi, I'm not talking to you because I came back from work very late.
All of us came back from work late. Please, let's continue.
Ah,
You
Yes.
people don't
madam,
refuse.
I'm not
You
talking to
don't
you, I'm
refuse
talking
to
to
display
Pelumi.
yourself. You don't
We are
refuse to
online.
display
Please,
yourself in the
let's
public.
You people, please, please. Jesus, let's go
Madam,
on.
I'm not
Thank
talking
you.
to you. Me when they talk to Pelumi what I'm saying.
this group cash flow is what question?
It's question 3.
Same
So
2024.
yes. So my VI, so my solo student and my online student, you can see what we face in VI. There are a
Sir, what
bunch
do
of
you face?
makers there.
Jesus.
Do you people see? Do you people see what you make our eyes to go through? Oh, okay. Online and a solo student. This is a one-off. Believe you me, we are the best. We are the best in this setting that we are in.
Okay. Guys, let's continue, please. So, the good thing about this one is that you might not decide to do it in the exam, that diet, and you still pass. Even if you, but I mean, they did not even teach most of our students. So all our students did not do it, and my students did very well. Those that I gave attention to, like I'm giving you guys so much attention, minimum 70 over 100 in the exam, which I believe all of you on our group should be able to not, you should not get anything less than that in FR, always an easy exam. So why I really want to also you to understand this is that they might ask it again. They might ask it again. So, and it would still be like this. Simple group cash flow is always this pattern. Is always this pattern. And there are just few additions that you just need to observe. And if you look at it, the question is clear. I like to read the requirement of the questions first. It says, prepare a consolidated statement of cash flows for the year ended using indirect method. So, I mean, just want to remind the guy that, okay, is indirect method though. So, and my additional information, they said, okay, we own the subsidiaries wholly owned. I was given the depreciation charge. Oh, good. They said there was no disposal. Okay, good. Hey, if you look at this additional information, they said there was no disposal. That means there can be addition. That means I'll probably have to look for that. They said goodwill is not impaired. Okay, good. Because I mean, I know that I won't make that assumption when I have a goodwill and NCI is valued at proportionate basis. Okay, good. So not at fair value basis, it's on proportionate basis. Fine. Okay. So yeah, usually for statement of cash flows, they will give me statement of financial position for 2 years. They have to, and they also give me my P&L for that year. So which I'm given here. Just that in this case now, it's a consolidated statement. Okay. Okay, so the first paragraph here says on 1st October 2022, Papaya acquired 90% interest in Bafana by issuing 1 million shares at an agreed value of 2 naira per share, paying this guy paid 1 million cash. Fine. And these are the assets of that subsidiary that I acquired. This is what I acquired. And then, I mean, I can easily get how they determine this goodwill, even though that is not necessary. That is not necessary. But can you tell me how this 660 was determined? I know you have done group. Most of you are gurus in group now. How did they determine this 660? It's not necessary. You don't have to do that in the exam, right? So just tell me.
Let me answer.
No, she has an answer.
Hello, sir.
Yeah, I'm with you.
Okay, so the percentage of the NCI was added to the cost of investment, and that led to the purchase consideration. And then the total net assets, also the percentage of the NCI was also taken from that and subtracted from the purchase consideration. That gives us the goodwill.
Okay. Okay. That's a good attempt. Any other one? Any other attempts? Guys, you really don't know. Go and think about it. Yes.
Yeah,
Two ways of paying for the
okay, somebody else second.
acquisition. We have for cash and we have issue of shares. So we'll add that cash consideration. Then this issue of shares, we'll do the issue of the percentage of share acquired times the market share of the share. We'll add it to this 1 million that was paid in cash. We'll add NCI percentage and we'll less the net asset at DOA to arrive at the goodwill.
Okay. So would that give you that 660? It won't. It won't give you 660. I would I would I will leave that for you. So let's go to the business of the day. Operating activities. So for my operating activities, I will just go to my P&L. Okay. And usually you start from PBT. You start from profit before tax. So then you adjust that for non-cash items. That's also very easy. So what's my profit before share? That's 4,200 as given in the question. Okay, so I need to adjust items for non-cash items. Okay, so and if you look at this PBT, how did they get it? If I'm working back, first is my admin. I need to get the non-cash item in this admin, add it back, or I mean, whatever. Then my cost of sales also, get the non-cash items from there. My revenue, get the non-cash items from there. But for revenue and cost of sales, that's what we call changes in working capital. I'm sure most of you just know that they put changes in working capital. Have you ever sat down to think that, okay, what's the essence of these changes in working capital? What's the essence? You see, all they are doing is just removing the non-cash elements from cost of sales and revenue. That's why those changes in working capital is from the cost of sales, they deal with inventory and payables. For the revenue, it's solely your, what do you call it? Receivables as well. But I mean, it's always a very static position or treatment at every point in time. So let me start with my admin expense. So for my admin, which non-cash item do I need to remove from here? Do I need to add back? Usually in your exam, there are majorly 3 of them or 4 mass. Number 1 is depreciation. Number 2 is amortization. Number 3 is if there is any gain or loss on sale of assets. And finally is if there is an impairment of any asset. Those are the 4 non-cash items you can have. But popularly in most of your exams, what you find is depreciation and gain or loss on sale of assets. Okay, and you can also find amortization as well. That question that Sheyi shared, okay, I saw that question. I saw that intangible asset was an amount at the beginning or in the previous year, and in the current year, it was now 0. It was now 0. And I look at the additional information, they didn't say anything about it. I have to assume that that decrease is amortization, which I will add back. They don't have to tell you that. You need to know that. Okay, that was the 2015 question that you shared in the afternoon. Okay, so for this admin, the examiner has made my life easy. They had already given me the depreciation charge for the year. So, add back non-cash items. And my depreciation is how much? 2,100 in my additional information. The examiner has given you. You know that if they did not give you, they didn't give you at all, I'm sure you know how to determine it. You'll have come to your PP to determine it, and it's very straightforward. It's just the movement in your PPE. Hopefully, you'll be able to see. I'm sure I will still solve more questions for you on cash flows, and you will see how I can determine depreciation from this movement. It's also very straightforward. But I don't have to bother about that because the examiner has given me that. So I move on. And from the whole of this question, the other thing I'm looking out for, because I know what non-cash item will be: depreciation, amortization, impairment, and gain or loss on sale. The examiner already told me in note 3, in my additional information, that there was no disposal of PPE. There was no disposal. So that means we can never have gain or loss on sale. So that means I'm done with this admin. The only non-cash item here is depreciation. Then I move to cost of sales and revenue. That one, we call it adjustment for working capital.
Hello,
Yes.
please, for the profit or loss on disposal, the profit, are we adding it? And the loss, are we subtracting it? Which one are we adding? Which one are we subtracting?
Oh, okay. The profits, we're going to have to deduct that. The loss, we'll add it back. And the reason is that if it was gain on disposal, that will have been added before in determining these profits. It will have been added. They have added it before. So since we are saying, no, this is non-cash, you should not have added, remove it. So we deduct that. If it were to be loss will have been deducted just the same way this depreciation was deducted in deriving these profits.
I didn't even bother to.
So we are saying that, no, you should not have deducted it. It's a non-cash item. Add it back. So we add it back. So loss will have been added back. Gain will have been deducted. So now let's go to adjustment for. Did I answer your question, Esther?
Yes, sir. Thank you.
Okay. So adjustment for working capital. So my inventories. Okay, please, class, listen to this one now. This is the only difference. You see, ordinarily, we will have just done the increase in inventory, 12,000 minus 14,500. That will have given me increase. Abi? But since we bought a subsidiary, this subsidiary figure will have been consolidated to get this 14,500. It will have been consolidated with that of the parent. It's a combination of the two. So we need to consider that and make sure that it actually gives us 14,500. Then that's where we are going to. That's the only addition. So what we are doing here, instead of just comparing 12,000 to 14,500, what you actually do is you say, okay, 12,000 plus this one, this purported 700 that they must have added. So if you do 12,000 plus 700, we would expect that it should give you this 14,500 expected balance. Okay, let me be noting it. How much was my opening inventory again? It was 12,000, Abi?
Yes.
Then
Plus
the
subsidiary.
Subsidiary inventory.
700.
was how much?
700.
700. So our expected balance is how much?
12,007.
7.
14,500.
Or you know what?
Yes.
Let me just do it the way I've taught you before.
After PSC
Expected is 12,700, and they will now less closing inventory.
Okay. If you feel that is better, I can do that. I mean, expected closing balance, expected closing inventory is
It's
12,000.
12,700. Yes.
So what's the closing?
But we close it.
5.
45.
14.5. Okay. So is this an increase or a decrease?
That's an
An
increase
increase.
So increase of how much?
of 1/8.
1,800.
Increase in inventory, would that be in jackets?
Yes.
It's
Yes.
in brackets.
Okay.
It will be 11.
How do you know that I should be in jacket?
And because if your
An
inventory
outflow
increase, you
of
spend
money.
more money.
Current
Like you use
effect.
money to purchase the inventory. So an increase means money has gone out.
That's correct. That's correct. Good. I'm sure you all had that. An increase in inventory means money has gone out. It means that you have bought more inventory. So the next one is trade receivables. So what's my opening receivables?
11,000.
11,000. What's the subsidiary receivables?
300.
300.
What's the expected receivables?
11.3.
13.
Expected receivables is 11.3. But what's our closing receivables?
13.7.
13,700.
13.7. This is also an increase in receivables by how much?
2,400.
2,400. So increase in receivables, 2,400. Okay. And the third one will be my payables. Okay. Because I cannot touch my cash. So I go to my current liabilities. I only pick payables there. So opening is 15.2 for payables.
Subsidiary is 400.
Minus 400. 400.
So
Yeah.
what's opening again?
No,
Payable.
15,200. 15,200.
Okay, 15.2. What's the subsidiary payable?
400.
400.
What's the expected payable?
15.6.
15,600.
Okay, what's now my closing payables?
16,900.
16,900.
900.
Okay. So this is also an increase.
Yes.
So we'll add it.
What's the difference?
1,300.
1,000.
Okay. Will this be a deduction or an addition?
Addition.
Addition.
Good. Like a reverse of that. Okay. So I'm done with adjusting for non-cash for everything. I'm done with admin, cost of sales, and revenue. Then I now go back to the item after my PBT, which is my income tax. And my income tax here is how much? 1,500. So how much of this is actually, so now we'll go back to like directs normally. The indirect is nothing beyond after you have adjusted for non-cash and working capital. It ends there. Every other thing is the same way that we do for directs. It's the same thing. So our income tax, how much was our tax here? Our tax was, there was opening 1,000,
1,000.
closing 1,500. So the same methodology that you have been using, I need to get my tax paid. What's my opening tax?
1,000.
1,000.
1,000.
1,000. What was my income tax expense in P&L?
1,500.
1,500.
1,500.
More five
That's too
hundred.
five.
Was my closing?
1,500.
2,000. 4,400.
That's too
Okay.
five.
Sorry?
Okay, we are now having, okay, yes, correct.
We will now have 1,000.
1,000 naira.
That will be our
So that 1,000 is my what?
Our tax paid.
It's my
But
tax
sir, in
paid.
this case, if subsidiary had, if they had something for tax, we would have added it, right?
Exactly. You will have added it. We'll have added it to this opening. So just the same way I've done for this one.
For current and deferred.
Okay.
Yes, for if you have current and deferred, you add it to. So I'll just do opening and we'll add the subsidiary tax, then the income tax for
The
the year,
income
then
tax expense.
yes. Just the same way. And that's all. I think I'm done with my P&L. There's no other item there. The only item there is profits, the share of profits. And that's just the answer. That's it. These 2,700, I've already worked on everything, so I don't have to deal with these other two guys. So what's my answer now? What's my net cash flows
That's
from
for
operating
2,400.
activity? Is it outflow or inflow?
2,400.
Outflow or inflow?
Inflow. Inflow.
Okay. So always remember to present this properly. If it's cash outflow, you say net cash outflows. If it's net cash inflows, you say net cash inflows. So I go to my investing activities. What are the items under my investing activities? I go to my assets again. Just the same thing I did the other time. In this case now, I go to my non-current asset. Good enough, there are only two items here. There's PPE and there's goodwill. For my PPE, you have to do that movement, which will now be the opening plus 19. They told us there was no disposal. Good.
Minus.
Yes.
Minus
There was depreciation.
depreciation, then you should get the balance.
Correct. Yes.
So let's find an easy way to do this. PPE. What's my opening PPE?
23,000.
PP.
What did you call it?
23,000.
23,000.
23,000.
Plus subsidiary.
What's this? What's subsidiary?
1,900.
19.
1,900.
Okay, good. 1,900. Okay, so
Depreciation.
to make it easy
Depreciation.
for you, let's leave all those ones. Let's do depreciation. What's my depreciation?
2,100.
2,100.
Are we lessening this or adding it?
Or lesson
Lesson.
We are lessening it now.
13. So how much
Okay.
should be the expected?
22,800.
800.
That's the expected balance.
Yes.
We
22,800.
Expected closing 22,800.
22,800. So, but what was our closing?
The actual closing.
25,000.
65,000. Yes.
So there's an increase of how much?
2,200.
That will
2,200.
2,000.
That's we acquired more than.
Yeah, because if it had been a decrease, that would have been like a disposal.
There's disposal. So when you acquire, you bracket it.
So acquisition of PP,
Mm.
outflow, Abi,
Yes, sir.
2,200.
Christiana for president.
Ah,
Yeah.
so
Well, me,
I
because
go
I don't
to
want to trigger I'm talking.
One house, please. One house. Thank you.
okay. So I go to my goodwill. Now, this goodwill, you cannot pick it directly because it's non-cash in itself. But when you look at the component of it, the way it was determined by comparing this 1,000 NCI against this 2,600.
2,600.
So the only cash item within the determination of this 660, there are two cash items there. Number one is this 1,000 or 1 million that we paid, which is an outflow. Number two, in the asset of that subsidiary, we met 100 naira there. So that means we'll have like a net cash inflow from acquiring this subsidiary of 900, or a net cash outflow of 900. We paid 100. We saw 100, we paid 1 million. We saw 100 in his asset, as part of his asset money. So that means effectively our outflow is 900 or 900,000, not 1 million. And that's the only cash item or cash element of this 660. You know how goodwill is determined? Purchase consideration compared with net asset acquired. The only cash element there is the purchase consideration we paid in cash, net it off against how much money we met in the subsidiary's account. In this case, we have 900,000. So I will go to my investing. I will have acquisition of subsidiary, which is, we'll have 900 as an outflow. So it's always like that in the exam. And that's all for investing, because those are the only two items we have: PP and goodwill. PP and goodwill. So when you net this together, what do we have? You can see it's a net cash outflow.
3,100.
Yes. Let's see if it is. Okay, so let's do our financing activities. And for my financing activities, I go to my liability and equity section of my statement of financial position. So where is that? Okay, my equity. So for my equity, for my share capital first, my share capital is 10,000. It increased to 11,000. Just the same way we have been doing. I have to do the workings here, because we also issued shares to that subsidiary. So share capital,
10,000.
opening share capital is how much?
10,000, sir.
10,000.
Okay. Subsidiary shares
Purchase.
was how much?
1,000.
How did you get these 1,000?
1,000 times 1 there.
Okay. How did you get this one?
Which one?
You said 1,000 times 1. How did you get this one?
Ordinary share capital, 1 naira each.
Oh, thank you very much. Yeah, that's it. Because
Ordinary. Okay.
shares are
That's it.
always at nominal value. Good. So, what's the expected balance?
11,000.
Sorry, please, where did they get the 1,000?
Oh, okay. The 1,000 was gotten from the share we issued to the subsidiary. They said we acquired 90% of Bafana by issuing 1 million shares. Okay. At an agreed value of 2 naira per share. So this 2 naira is the issue price. Okay. But since we are the one issuing the shares, when you go to statement of financial position, these ordinary shares here, after equity, our nominal value is at 1 naira. Okay, even though the issue price that we issued it to this subsidiary is 2 naira, the nominal value is 1 naira. So what goes to share capital, what increases our share capital will have been 1 naira. So that was how we did 1 naira times 1 million. That means the remaining 1 naira out of this 2 naira will have gone to share premium,
Yeah,
which is also
premium
that 1
shares.
naira times that. So, okay, I hope that's clear. So expected balance is how much?
11,000.
11,000.
So how much was the closing balance?
Actual
11,500.
closing 11,500.
11,500. So there's an issue of shares of how much?
500 naira.
500.
Let's do the same thing for the share premium.
5,000 plus.
What's the opening?
5,000.
5,000.
What's the subsidiary premium?
1,000 times 1 naira. That's the purchase
Yeah,
consideration. That's the premium part of the 2 naira. 1,000.
exactly. Yeah, that's the premium part. What's the expected balance?
6,000.
6,000.
What was our actual closing balance?
6,500.
6,500.
So how much is the premium?
500.
500.
Okay. So for my issue of shares, I have 500. For my premium, I have 500.
Sir, please, I have a question.
Okay. Go ahead, please.
Okay, so my question is, let's assume that we're not given a premium figure in the question. So I think that if we want to calculate our premium, we will use our retained earning, the balance brought forward of retained earning plus profit for the year minus closing retained earning, right? To get
That's
our premium.
dividend. That's dividend.
Oh, okay. So how do we
That's to
calculate
get
our premium? Let's assume we're not given the figure
it's just as we have done here, difference between opening and closing.
of retained earnings.
No, of
Of
the
the
share
share
premium.
premium.
If you are not given share premium at all, don't worry about it. That means you don't have to work on what you are not
Yes.
given. For premium, you ignore. Because in this question, the reason I'm considering it is
Okay.
here, is given as a line item here. Okay, so let's move to retained earnings. So our retained earnings at the beginning was 15.3. Ordinarily, what she has said now, you will now add profit for the year, then whatever balance. But the examiner already did it for us in this question. They already did statement of changes in equity. And there was no dividend. If there was dividend, it will have shown here. Because everything balanced out. 15.3, profit for the year was 2.6, closing balance 17.9. And you see this 2.610 is this one, the profit attributable to owners of Papaya 2.610. I hope you saw it. I hope you can see it. This 2.610. So there's no dividend here.
But then they fear. Say we don't
So
understand that.
that's
So they won't come repeat us. They don't teach them now. One or
If you are not asking questions or you are not giving answers, please mute your mic. Thank you.
yeah. So the only item left here is NCI, which is 310. So usually when you have NCI, and you want to get the value of your NCI, they gave us as 310, which is the balance. But if you recalculate it, if you do your NCI, they told us that they use proportionate method, the value of NCI using proportionate method. NCI has 10% of the net asset acquired. How much was the net asset acquired? 26. Net asset acquired was 6.
Yes, sir.
So what's 10% of 26? Just
260.
260.
That's 260.
Then you had share of post. Yes, please go ahead. Share of post-acquisition profits. I go to my P&L. So the NCI has 90 from here. It got 90. So ordinarily, this is how we determine our NCI. So the value at the end, 260 plus 90 is 350.
Yes.
But the closing NCI we had, why are we having 310?
Paid dividend.
That's correct. That's correct. Where is it again? Yeah. So the difference is as a result of dividend paid of how much?
14 naira.
40 naira.
So we go to dividend paid. Jacket of how much? 40.
40.
Do you have any other item?
No.
So net
Net
cash
cash inflow 960.
from financing. So this is 960. So reconciliation.
Also, these two scissors, we use the NSI percentage. Where did we get?
Oh, from the question.
uh,
This
The
260,
net
the
asset
net
has
asset
theory.
acquired. Can you see the
the
26?
Up is up.
subsidiary
Net
share?
asset.
Okay,
The
okay.
19 naira, where did we get that 19 naira?
That's the profits, the share of
Is the
profit of the
profit attributable to NCI in the profit and loss? If you
Can you
look at
see?
that down part, non-controlling
Okay.
interest 90.
See, I've seen it.
So reconciliation of cash and cash equivalents. So what's the cash and cash equivalents during the year?
260.
So what's
I
960?
know. 260. Let me get
960 plus 24 minus 31. How much is that?
250. 260.
260.
Yeah, 260.
What's my opening cash and cash equivalents?
500.
500.
What's my closing cash and cash equivalents?
760.
760.
Hey!
So if you're able to get it like this in the exam, oh, good. If you don't, still good. Move
We
on.
get it in Jesus' name. All of us will get it.
Let me share this with you. And
Amen.
your exam is very close, right? If I were you, I would just solve this myself almost immediately. Then you know that you are done with statement of cash flows. Because you always still find it, this diet, it will still be there. Still be there. So there are some people I'll be removing from that group. I just said that new group is supposed to be that, okay, everybody that is there should pass naturally, and I'm going to use it to measure after your result comes out. All things being equal, nobody on that group, with what we're going to do for the next 1 week, none of you should fail that exam, because the exam is not like hard like that. So I just want to revise with you things I know. I'm
No,
sure.
Mr. Wasi, no, yes, we are not failing. We are not failing.
So there are some people I would start removing from Monday. Those are the people I see that this one wants to fail. I'll quickly remove them so that I will be left with those that will know that are part of us and are following what exactly, and I know that they are actually doing what they should do. And I will be sure that if I'm sending 70, 75 of you to the exam, I know that all of you are going to pass EFA, because it's not going to be outside of anything we have actually looked at. So please, let's be consistent with whatever we have. What we are doing right now is very important. And there are things you are familiar with. It's just revision. So, and as we are doing it, immediately be doing it, except if you have solved it before. Fine. You just want to listen to what I have to say. Otherwise, immediately go and solve it. This is not, you cannot postpone anymore. This is now what is dojo anything, if you understand Yoruba. So let's do what we have to do. So tomorrow,
Eyes of the carton.
again,
Hello, Mr. Wasi.
yeah,
Mr. Wasi, sorry. Uh, will you be sending this particular class,
right away.
the video? Yeah.
Yeah, I will share the video. So I will upload the video. Before you wake up tomorrow, the video is there already, and I'll share it to the group
Okay.
for you.
And
We'll be
the
struggling
PDF,
with
sir.
The
we'll be,
Yeah,
pictures. So
we'll be,
someone was not in the video.
The
Just
PDF,
watches
the
everything.
PDF, sir.
yeah,
thank
You
you,
already
sir.
said you'll share everything.
yeah. The
Thank you.
PDF in our group now. So I'll see you guys tomorrow.
Thank
Bye.
you, sir.
Yes, sir.
Thank you,
What
sir.
time
Thank you.
Yeah, thank you, sir.
Thank you so much, sir.
Thank you, sir.
Someone is asking question.
Nobody.
Is this time still
Yes,
remain?
sir.
You
What time
will
again?
get
What time?
That person
depreciation
will get it tomorrow.
on the question if you are not giving. Come tomorrow.
Oh, how do you get you? We are still going to solve
Make sure
during
you
the
come
week.
tomorrow.
We are
People
going
come
to
as how?
do
Is it physical
Online, 8 o'clock.
Well,
In
it's
Virtual,
morning.
online.
virtual. They already said it's
8 in the
virtual.
morning. Once it's 8 o'clock, you are started though.
Wait,
Oh,
sir, what
No,
time
tomorrow
tomorrow
is
morning?
afternoon. No, it's Sunday that is 8 o'clock. Oh.
It's Sunday, it's 8 o'clock. Oh.
good?
Sunday 8 o'clock. Tomorrow is in the afternoon. Okay.
It's 2 to 4 p.m.
And when you want to Sunday 8 o'clock tomorrow afternoon.
Got it.
Good night.
Good night, people.
You guys
Good
should
night.
continue.
Sir.
Good night.
nice.